The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
As we said earlier, U.S. markets are entering earnings season, and joining us now to discuss the crypto markets is Kapil Rathi. He's co-founder and CEO of crypto exchange CrossTower. Welcome, Kapil.
Thank you, Lawrence, and congratulations for completing that bike ride. All the way to
Thank you. Thank you. You should be congratulating you for completing a whole weekend in Montreal in one piece. That's actually a bigger deal, but that's a different story. Speaking of things not necessarily in one piece, we of course are seeing Bitcoin right now about 20,000. It was up to 21 and change. But we're entering a kind of a weird time right now, as I've said earlier, is that we have this earnings season coming in, and we might start seeing some negative sentiment move into the markets. Do you think that's going to necessarily be the case, especially when we see, we saw a strong jobs number, we're seeing inflation. What's your take on all these macroeconomic factors and how they play into crypto prices?
Yeah, there's definitely a lot of eyes on what Q2 earnings will come out to be. On the sort of kind of macro, it seems like there is a lot of margin compression for a lot of companies, not necessarily because the demand for their product is on the downside. It's more about the cost to operate these companies is getting higher and higher, given the supply issues, inflation issues, commodities prices going up. So a lot of companies are struggling on the expense management side rather than any major sort of downfall on the revenues. Crypto has, of course, its own challenges. It's coming out of what I call a cleansing event. I think I was listening to Sultan, and he's spot on that sort of lack of regulatory oversight has taken it a little too far. We at CrossTower, I think we find these, it's kind of very similar to what we saw in 2008. The companies who are focused on regulation and compliance keep getting stronger after events like this. That's how we built CrossTower. And some of these kind of bad elements, the cleansing is happening. I think overall, it's when we come on the other side, it should be a healthy and stronger crypto market.
Nonetheless, we're still facing potentially more events happen, and we've been seeing these polls come out, and depending on who issues the polls, different outlooks happen. The options market, of course, is probably the only real poll that matters, but nonetheless, we see these sentiment polls. Some saying, Bitcoin, the average holder thinks it'll go up to 37, and in other cases, it's like no, they think it'll go down to 10,000. What is the general sentiment, and what kind of movements do you see happening over the next several weeks, at least, even as not just with this earnings season, but just the overall crypto market sentiment? Is it bullish? Is it geared towards the bullish side, or is there a feeling that there might be more cleansing events coming up soon?
I think. When sort of if you look at in the history, we went through this similar events during long-term capital management issue, sort of whole debacle. Then financial crisis showed us the same thing, and here we are. This is kind of like a third time in a row. My hope is that the parties who were intermingled in this entire sort of started with Luna crash, then Three Arrow, who took probably the biggest hit because of Luna crash, and then Celsius, BlockFi, Voyager got exposed to this particular one entity. We're not hearing, or we're not sort of at least on the street, there's no talk about if there is any other party who may be susceptible to these issues. I'm hoping, and I think hope I'm right, that we are on the other side now. Q2 earning could have another pressure on the market, but in terms of the players that are now quote unquote left in the market, you have FTX, Binance, firms like us, Galaxy. I think there is a lot of experience in these companies who've gone through these type of challenges. We all come from traditional market, from TradeFi to DeFi here, I think you will find that the stronger players are going to keep getting stronger. So I'm hoping we see upside from here.
You would have, I mean, there were strong arguments for saying that Voyager was a strong player with a lot of experience, same with Celsius, same with Three Arrows. I mean, they were a very well-revered fund in crypto. And so I wonder, what are the lessons out of this for you coming out of this, that your exchange was able to survive, FTX, as you mentioned, Binance were able to survive. Why do you think that is over these other companies? What have you learned? What are the lessons?
The most obvious lesson is common sense. I think to actually go out and market something that's inappropriate and incorrect, it just doesn't make sense. Not having a proper risk management, not having proper margin management against your counterparty, to have so much exposure to one single counterparty. I mean, we learned this lesson during the whole subprime crisis, that one or two parties can actually take down the entire Wall Street. I think there were principles put in place after 2008 financial crisis. And most importantly, this is where, if crypto industry still wants to push back against regulation, honestly, we're going to keep hurting this industry. We need a third-party oversight. When you have these 5-6 companies intermingled, you need somebody on top of these companies to be able to oversee what's happening. So whether it's reporting process, whether it's declaring what type of risk you have or exposure to have one single party, I think those principles have been applied in the financial market for decades. We can bring those principles back into this market. So the lesson learned for us, we built CrossTower as a compliance first, risk management first exchange. We don't necessarily go after every other sort of comparative opportunity. We don't go out and say earn 12%, 16% interest rates. It's still, there are parties out there, I won't name it, they are offering 16% interest. If you can make 16% in this market, more power to you. I haven't found an opportunity in this market.
And Kapil, I'm just curious about, you deal with a lot of professional traders, financial institutions. What are they doing in this market? Is this an accumulation phase for them? What kind of activity are you seeing on CrossTower?
Yeah, so we're seeing a lot of good activity on our futures trading now. We launched our futures back in March, and week over week, we're seeing growth in that sector. Our OTC trade desk is doing really well, primarily for hedging strategies. In fact, this is the first time where we're hearing from Bitcoin miners. 4 months ago, they won't think about what hedging is. They always consider themselves as hodlers. They're not concerned about the short-term movements in prices. But this has actually brought some fundamental issues for mining community, and now they are looking to put some hedges on those trades. Because if Bitcoin goes further down from here, I think the sweet spot is somewhere around 15,000. A lot of these mining companies will be in serious trouble. So they need to protect further downside from there. Short term, can it go down there? Possibly. But if you're not protecting yourself, you may be out of business soon.
So you mentioned firms that are still offering about 15%, 16% APR, APY rather, on staking and what have you. One big criticism of crypto is that it's sort of like a closed loop. It's kind of its own little bubble, if you will, and that it essentially is Ponzi-nomics at its worst, because it just depends on people going into crypto to provide those yields. Do you think that this raises a major question for the overall market institutionally, but also even for retail investors, that as they look at this and they see these implosions constantly happening in their eyes, right? Because for the average retail viewer, and the average, even institutional viewer, they're seeing every few days another domino fall in the crypto markets. Do you think that the fact that it is this closed loop and not part of the overall economic and financial system, that these DeFi platforms are just basically borrowing against themselves to trade against themselves, et cetera, that this will ultimately spook the general market and actually have a long-term detrimental effect on crypto?
Yeah, so I mean, an average crypto trader actually has a higher IQ than a traditional equity trader. They're smart people. They should be able to look at, you can't make these yields out of thin air. There are only very few ways to make yield, right? So number one is market making. So pretty much in this entire sort of, if you look at the ecosystem, as retail customers are depositing their funds at Celsius, BlockFi, Voyager, they are giving those funds out to market makers. How does a market maker make money? They make money on the spread on exchanges. Crypto has its own issue compared to traditional market, where market makers actually have to deposit assets on exchanges. You don't have that problem in traditional market. So that demand for asset for these market makers is huge, and they're willing to pay a certain portion of their income. The returns in this market for market maker are pretty substantial because the spreads are wide, market is very volatile. But when the volumes start going down, those market makers are not making any money. And when those market makers are not making any money, if you're still seeing 16%, it's common sense. You should be looking at where else this money is being made. I mean, look at Anchor Protocol. It was giving 18%, 20%. And I definitely know there were a lot of institutional customers who were looking at it like, why am I missing that 18% party? I need to go in. It's common sense.
Oh.
Question, look behind the scene, why you are getting, how is somebody able to pay you 20%? The only other way to pay 20% is Ponzi scheme.